Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. We talk about Tesla's mind-blowing margins and insane levels of profit. These tend to be the sorts of things you look for in a business, as well as an insane level of growth. Of course, companies like this don't come up often, so when they do, my advice is to jump all over them. Well, Tesla has such good margins because they simply price their cars so high in the market. The higher you raise your prices, the more profit there is, assuming your costs remain equal and your quantity of sales. And it appears that Tesla are able to raise their prices and maintain the same quantity of sales. Now, I did say sales, not profit. With a typical supply and demand curve, the higher you raise prices, then it reduces the quantity of sales. The more expensive an item becomes, the fewer people there are that can afford it. But supply and demand curves are only valid on the basis that you have almost unlimited supply. If prices go up, then you'll supply more, because profits are likely so much better. However, as we know, Tesla are supply constrained. Now, due to Tesla having a waiting list, this is evidence that Tesla are selling below the market clearing price. In other words, Tesla are purposefully choosing not to make as much profit so that more consumers can actually afford a Tesla. So bear that in mind when you complain about the high prices. Tesla are still giving you a discount from the value they are offering you. How do I know? Because people wouldn't order and wait for a year or so otherwise. I was speaking to Tesla the other day even, and they said my Plaid is still going to be a couple of years away, and I ordered the first one coming into my country. Customers are willing to wait, and Tesla chose waiting as the additional cost rather than higher prices, or now somewhat a combination of what is best for business, while still making efforts on keeping prices low. But guess what? More and more people keep buying Teslas, and demand keeps rising faster than supply. Tesla could make even more profits with their cars if they just raised their prices higher. To give you an example, what if Tesla raised the price of the Model Y to $75,000? What if that then removed the waiting list? Perhaps you receive a brand new Tesla in just a couple of weeks, but the cost is $75,000. You see? You don't have to wait a year anymore, you get your Tesla instantly. And there are enough customers to pay that price. What does that mean? It means the true market value of a Model Y is $75,000, which means that anyone ordering it now at $66,000 is still buying it at a $9,000 discount. You just have to wait a year or so until you receive it. On top of that though, Tesla would have released some more software features by then, so by the time you actually receive it, it may even be an $80,000 car. The perceived value of the product has increased and will continue to. And amazingly, Tesla won't stop there. They will keep adding value, like 4680 models that handle better, likely charge faster, and eventually even more range and acceleration, or even more value. And funnily enough, it costs less to build. Yeah, imagine a long-range Model Y coming out of Texas in a few years' time, perhaps 350 miles of range, 300 kilowatt charging speed, probably even FSD capable. Wow, if the old Model Y long range had a market clearing price of $75,000, then what's this one going to be? $100,000? Well, that's the issue. Now, if there are people complaining about the price of the Y at $66,000, well, there'll be even fewer people who can afford $100,000. There does eventually come a point where it's literally unaffordable for people. None of this, well, you could afford a Tesla if you sold your house and Ubered every night sort of stuff. A lot of people have no physical way of finding $100,000. Even if it had 1,000 miles of range and could fly, it would make no difference to some people. They still can't afford it. For me, if it flied, then you bet I would rather own that than a house. And that's kind of what we've been talking about lately. I expect to see a paradigm shift on how people value Teslas when they really start to realize they are much more than just a car. And I'm not even talking about FSD. I do somewhat kid about how if you wanted a Tesla, you could have a smaller house. And I mean Tesla is more than a car. But now, when you live in your house, you generally hang out in living areas or bedrooms, i.e. you don't tend to spend too much time in the garage, unless it's some sort of hobby. But now you have a Tesla in your garage, there is an additional living room. My kids go in there and play games and hang out, and we have a reasonably sized house. If you had a smaller house and there was nowhere else to go to watch Netflix on your own, a Tesla acts as an additional room in your house. I hope that doesn't sound like I'm reaching too much there. I'm just trying to illustrate that Teslas bring more value than just a car. Eventually, the value of a Tesla is just going to be too hard for many people to ignore. A lot of customers might also get FOMO as they start realizing the value and may be worried Tesla hikes the prices yet again. Tesla's demand is increasing just because more people are discovering the vehicle. More owners are convincing everyone they know to buy one, and every day there are more owners adding to this zero-cost grassroots marketing strategy. But like we said, there has to be a limit to the price, even if there isn't for desirability. The result is going to be that Tesla are just going to have insane value. I think the world will just accept we have an additional expense in life that is worth paying for. I mean, 20 years ago, most of us didn't have to pay for internet, a phone plan, Netflix, YouTube, Spotify, etc. But we accept that they improve our living standards and justify the expense, as they offer such amazing value. $1 million or so worth of movies and music for just $10 a month. That's a good offer. Just like we might accept $200 or $400 a month for FSD, or we might accept that we buy a Tesla more like a house than a car, and perhaps have to pay it off over 10 years or so. With all the additional value Tesla had added, and when Tesla finally start reaching some decent levels of supply, well, eventually there may be a time when the prices actually come down. By this stage, like we say, the Model Y long range may be of about $100,000 of value, yet costing an insane $30,000 to produce, possibly even less. So if the prices started coming down to under $60,000, then consumers are going to look at Teslas as incredible value. Whereas now, they still haven't gotten their heads around the value they bring, and are still on the mindset of valuing a Tesla like an ICE car. That low cost of production is the other part of the key. First, add value to the product with technology, then reduce the cost of the car with technology. You end up with a lower cost and higher price and increased margin. There is a lot of margin there, and we often look at it as a buffer for in case we get into a recession or if demand starts to drop. Then Tesla can reduce their margin slightly and the demand comes right back. And that is the pricing power Tesla has. Right now, they have inelastic demand and can raise their prices to increase profit. However, they also have these huge margins, which are only getting larger for the time being. The margins mean that Tesla can lower prices if they ever need more demand. Margin is stored demand. Tesla could lower their prices by about $20,000 on some vehicles and still make a profit. Can you imagine what Tesla's demand would be then? In fact, when FSD is complete, despite these huge margins, Tesla actually stand to profit more from FSD subscriptions. In other words, again, despite these margins, Tesla could sell the vehicles at break even and still make a lot more profit per vehicle than they do today over its lifetime. Wow, imagine trying to compete with a company like that. Tesla are saving costs at unprecedented levels with unfathomable amounts of vertical integration that is creating a moat like no one else has ever seen. No one is coming for Tesla. No one is taking Tesla's market share. Tesla will sell every car they make and do what they can to make as many cars as possible. No one else is even making a profit, whereas Tesla can afford to drop their prices as much as necessary. If recessions or markets ever get too bad, remember, Tesla has this pricing power where they can control the level of demand they want at any time. And if it's ever that bad for Tesla, then it's significantly worse for everyone else. Tesla automatically has this enormous buffer of margins to get through any bad times. And if they are so bad for the competition, then the competition will go under before Tesla. And if the competition go under, then there are fewer competitors, or less supply, which means the demand just returns back to Tesla anyway. Tesla's pricing power is unassailable. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.